right, good morning, good afternoon, good evening, everybody. Trading session is just about ready to go. We've got a special guest here. We've got Chris Pulver. Some of you are going to be familiar with Chris. If you guys work with market traders, you're probably familiar with Chris. I been very fortunate to learn a lot in following him over the years. Really, I give Chris a ton of credit. I don't know if Chris can hear right now. Chris, is your audio working over there? You ready to rock, brother?
I'm ready to rock, dude. Ready when you are.
Beautiful. And I guess we'll just get started. I want to go through a couple of things here just to make sure everybody understands where the resources are available before we get into the live market stuff. And then, Chris, I'm going to hand over the reins to you here in a couple of minutes, if that's all right with you.
Yes, sir. Sounds good.
All right, perfect. And, first things first, I got to cover my base. If, let's just say if we're going to talk about any trading in here, trading ideas, whatever, I have to let you know there is risk involved in trading the Forex, or really any market for that matter. If you put your money in the Forex, your capital is at risk. You have to risk it to get the biscuit, people. There's no such thing as a guaranteed trade or a guaranteed investment. And that's why you will see us trading with stop losses all the time because, well, there's no reason to take infinite risk. If you do have questions, okay, there will be lots of opportunity to ask questions. There are, there's probably somewhere close to about 30 years of trading experience in here to show you guys this stuff today. If you have a question, then you should ask, because that's the only way that you will ever find out what it is that you don't understand. So we're going to cover a lot of topics in here. And we used to cover a lot more stuff in here for, all intents and purposes. Some of you might be here for your first time. And I do want to make sure, let me get the questions box up here, make sure everybody's square. Good morning, Val, Dava, Ricardo, Tony, everybody. But yes, our primary function at 123Trade is to help you get a regulated, secure brokerage that you can, sleep easy about and get awesome trading conditions. That's really what we're aiming to do. Okay, so we're going to provide as much guidance and mentorship as we can along the way. We want you guys to have a great trading experience and something that you can maintain for years and years and years. And really, we want to help teach you how to fish. So that's really what this is about. Charting connection setup, all that stuff. If you guys do have questions about that, send an email to brokers@123trade.com, or we have lots of resources available. For example, if you come to 123trade.com and you check out our website, well, actually, if you wait longer than 5 seconds, there's going to be a pop-up here. We actually advertise Chris's newsletter on our website because, let's just say I'm a follower. I'm following Chris. I would strongly recommend that you guys do the same, and it's really easy. You can sign up for free. It's on our website. It's right here. Otherwise, on this page here, if you click YouTube, okay, this video, for example, will be posted later, and you may want to watch it again because we are likely going to show a lot of things in here. You're going to get some new perspective, especially those of you that haven't seen Chris trade before. He's got, obviously a different perspective than I might, or you might, or any other human alive might. And I think he's pretty good. I think, Chris, how many pips are you up in your flex trading room so far this year?
We're up 35,000 pips this year.
You said 35,000, like 3 zeros?
35,000. That is correct.
That's pretty killer.
That's pretty good. With a Q4 that's, we're 1 month into Q4. We're doing pretty well.
Yeah, that's pretty, for those of you guys that aren't aware, 35,000 pips, even from a mini lot perspective, and for those of you trading, with 400 to 1 leverage and 500 to 1 leverage, those are $20 trades to open. So, we're not talking about massive positions, and that'd be a $35,000 gain from those. So obviously it's a long game. This isn't something you do every day. A lot of you are trading micro lots. That's still $3,500. Okay. That's what type of opportunity that is. So if you guys can understand, that is an absolute massive move. Yes, Tony, that is me on the thumbnails. There are some educational videos in here you guys may want to check out also. So if you want to know about, how to run your robots that you have, for example, then there's a video here for you to watch. If you guys want to know how to trade with MetaTrader 4 or Smart Trader, these walkthroughs here exist for a reason, and I very much believe that it'll help you a lot. If you want to track your results with the MyFX book, there's a video for you to do that as well. But I don't want to get too far in the weeds with the website. We also have the news channel. This is not something I'm going to go through in this session, but something I strongly recommend you check out if you want to be up to date with what's going on in every major world economy, because it's all on one page right here. And really, this is where, well, let's just say this is all the Google searches that I used to make every day. And now they're automated and just in the website, and I can go to one page, not have to type anything into the search bar on Google, and it's just here all the time. Okay, so I think, Chris, do you want to go through the calendar with me real quick, or do you want to just get started with the charts and do some pure tech? I don't know exactly what you want to do.
Go through it together. Yeah, let's go through it.
All right, cool. Well, then let's get this thing pulled up to this week. Give a quick recap. And Chris, I mean, I just want to go through them and give them a little bit of an idea of what these mean, and really more or less what we might want to focus on. But I will, I'll let you take it away, brother. I guess, do you want to take the screen? Do you want to take the screen, actually? That might be easier for you. Then you can actually show, like...
Yeah, that's fine. That's fine. Let me grab the calendar here really quickly. I'll grab the screen. We'll do the whole week. Let's do high impact only. All right, cool. Let me grab the screen here, Will.
All right, I'm going to make you the presenter.
Alrighty.
Give me 1 second here. If I can find the list of people. Oh, here we go. All right.
Perfect. Okay. So this is our economic calendar, looking at high impact events. And so typically what I look at, week to week is what's high impact and what currencies are we trading around. So this week, for example, if you want to pay attention here, we had some Aussie CPI news that came out on Tuesday evening. This is Eastern Standard Time. So 8:30 p.m. Eastern Standard Time on Tuesday is actually Wednesday's trading day. So we can see the CPI quarterly news came out as expected. The trimming CPI was slightly better. Wednesday was a pretty crazy day. We had the annual budget for the pound, again, high impact news out of UK. And then we had a rate decision out of the CAD. I wish I could show Wednesday's currency strength, Will. I know that we're trading this live in the Flex room. We saw this massive spike. The CAD was weak all morning until we actually came to that Wednesday 10 o'clock rate decision where they kept the rates the same at 0.25, and then he jumped. We probably had, I'd say if you look at the Euro CAD, we'll show this on the chart in just a second, but just lots of volatility. So for traders out there using the economic calendar, here's what I've learned over the years. I don't just trade the news like, oh, it's red, that means that's weak. Oh, it's green, that means that's bullish. It's not really the game. Like, you still want to learn how to trade the technicals. You want to trade it, pay attention to price action. You're still going to buy support. You're still going to sell resistance. But overall, there's a theme that gets built up here. There's a saying that says, buy the rumor, sell the news, or buy the rumor, sell the fact. Like, example, this CAD rate decision, it was forecasted to be an unchanged rate decision. So if we go into the actual medium impact news, what's crazy, Will, is a lot of these high impact events that used to be, the last 10 years, the last forever years, now all these rate decisions are medium impact because nothing is changing. Now, the RBNZ did change rates not too long ago. I think the last couple of weeks it went from 0.25 to 0.5. And that was the first central bank to really raise of the majors and crosses. So here's Wednesday with medium impact news. And you can see that the overnight rate or the BOC rate decision was forecasted at 0.25, came in at 0.25, and then there's a press conference to follow. So what does that look like on a chart? Let's just use this as an example. Same thing can be said on Thursday with the Euro, ECB. Now, Will, I don't know about you, but I was a big fan of Mario Draghi back in the day because he was one of the best market movers every single month. If you were paying attention to Thursday's rate decisions,
he was a real economist too. He's no, let's just say I liked him a lot more than Christine Lagarde.
Well, just for the fact that the volatility is just, I mean, we actually had some movement yesterday on the Euro, but it wasn't fantastic. But man, Draghi just did an amazing job of actually moving the market. And, I would listen to what he said. I'd watch him live, and it never really changed. He said the same stuff over and over, but the market just hinged on his movement, or it was just like, let's use it as an excuse. And so all this right here, by the way, if you're using the news, if you're using the economic calendars, it's important. It paints a picture. It provides a narrative. But at the end of the day, this is the fuel or the catalyst that helps drive the technicals of the market. I'm telling you, Will, if you never had an economic calendar, agree or disagree, if you never had an economic calendar, you might not you may not know why things are moving, but you can still trade. You can still trade very effectively by just trading structure and price action on the charts. But to put the whole thing together, we're not just a one lens trader. We want to have the holistic approach. We want to know what's going on fundamentally. And so I like to say that I'm fundamentally aware, but I'm technically driven. So as a Forex trader, I'm definitely technically driven. All right. But the ECB press conference,
I think Chris, they're going to love you, Chris. This is what we do in here. Well, let's just say I copy you a lot.
Yeah. Well, that's good. That's good. So we had GDP numbers for the U.S. We saw actually a pretty big pop to the downside in the U.S. yesterday. So everything was flowing against the dollar. And then today it's coming back, which again, it's kind of the last trading day of the month. So we're seeing some month-end profits. We're seeing some equilibrium for the month. And then we had CAD GDP today, which popped a little bit with a slight miss on the CAD. But if we take a look, I'll show you Wednesday. I think this is a good week to pull from with that CAD rate decision. Let's just go to a chart here, and let's go to, say, I have a vested interest in Euro CAD because I'm in it and I'm currently long. So I'll show you this chart, and I think you can see very easily on this chart, everybody. I want you to pinpoint where you think the news is. Okay, I'll give you a guess. Do you think the news is somewhere in here, or do you think the news is somewhere in here? So let's say, is this option 1 or option 2? Type it in the chat for me. Is it option 1 where the news was, or option 2? Of course. So this is what news can do, right? But at the same token, did this news event actually do anything to change the overall structure of this EuroCAD? So here's my outlook on the EuroCAD. We had this crazy flush down. It's interesting. This is actually a part of my Flex trading room. So I have this workspace already set up. I use this with my traders every single week. And I'm actually looking for a buy zone off of this support level. So we have this major support level. This is one of my robots, the Price Action Pro. I have my Perfect Storm Pro also picking up some buy trades. But what was crazy is this was a flush down into my buy zone, and it was, aggressively falling. I had to take a bit of a stance and say, look, I'm going to trade the robot really small, let it level myself in. But then we also had oversold conditions with some divergence, and that news yesterday didn't really change the outlook of my overall structure. It didn't break and go lower. It's not flushing down any further. And so we essentially just retested the lows. And we retested the lows and actually created slightly stronger divergence. And so I'm actually looking for the EuroCAD to head back up in the next couple of weeks towards 4,600. And that's actually my trade. So I'm in a couple of small robot trades. I added a few manual trades. And after the shakeout yesterday with the news, I'm long going towards 4,600. And from there, there is a chance that this could come all the way back up here to this resistance and this neckline. However, I'm not going to try to hope that it comes up that high. What I'm going to do instead is, if we come back up to past support, become resistance, past support, become resistance, that's a safe spot to get out for profit and protect and see what the market does. Because if this is a trend to the downside that pulls back, we could certainly continue to go lower, and this would be your equilibrium. So even though we had news this week and the rate stayed the same and the reaction was aggressively strong for the CAD initially, do you notice how all this did was came back down, tested the lows, faked out, and then went right back up to where the news started? Now, this isn't what news does all the time, but I'm just saying this is kind of some of the interruptive volatility that we can have day to day. So the news acts as a catalyst. It acts as an excuse for volatility to occur day to day. And without it, we probably wouldn't have any movement in Forex. So it's you can't just trade technicals without the news. There's got to be something that drives it. And the same thing is true in the stock market. We've come off a big earnings season. This was tech week, so we had like 100 and some stocks in the S&P 500 reporting earnings. A lot of them were tech stocks like Amazon and Google this week and Microsoft this week. So anyway, here's another example. Let's go option 1, option 2. Let me know if you can see which one is the news. What do you think? Is it in area 1? Is this where the news was? Or is it in here? Where's the news? 1 or 2? Yeah, of course. Tony's got it. Yep. Sheik's got it. Lucas has it. Errol's. Yeah, exactly. 2. You can see it pretty easily. So, news does have an effect on the market. And this was the same thing. Look at this level of support All the news did is came right back down to this level, tested this support, and then ended up pushing right back up. Okay, I'm gonna teach you a little bit of lesson today. This actually is one of the strategies that I teach here at Market Traders called pocket trading, and this is a great level of it's an illiquid level, which means if I see inefficiencies in price action, I tend to trade back towards them. And this is actually a perfect example of that, because coming back down to these lows with this type of inefficiency on a news reaction, I bought that low and I took it right back up to fill that gap. And so that was about a 70 to 80 pip move that was intraday. So not too shabby. But again, you look at your charts, you look at equal support, you buy these lows, and you have 100 pip opportunity right there. So I didn't get in right at the low. I'm not gonna lie. Like, I saw this thing bounce and react, and I was like, all right, let's see what the CAD does. But once we started to go down to a smaller time frame, let's go back to this chart right here. Maybe I can go with a 5-minute chart, be a little bit cleaner. Let's go 5-minute chart so we can get a little bit more data, a little bit faster. There it is right there. Take a look. So this is our news candle from Wednesday. So we had this crazy drop and this big inefficiency, and it started to settle back in. If you start to notice that it's pushing bullish, starting to get bullish, okay, trade one. If it went against me, I would have been waiting for a trend line to break, and I would have had a trade two. I'd still be targeting this level. Let me use a straight line instead. I would target this level right here. That level right there, or that is the exact breakout level right there. In fact, I'm going to see if that exact breakout level was hit, because I want to show you the power of these pockets and how efficient this market actually is. So we can see that level, this first level, the lower level, was hit really easily, and that's where price came right back towards. Now check this out. Did both of them get filled? Yes or no? So we had news that created this inefficiency, this pocket, and once we started to gather support on the higher time frames, we started to see that was an accumulation level. Price comes right back to find what? The same level that it broke out from. And so that is why Forex can be sometimes very difficult to trade or frustrating to trade, because how many traders out there, how many of you watching, how many of you listening to this like to be trend traders, right? How many of you love trading trends? What happens when you trade trends when you're looking for this? Okay, you want to trade a trend, so you're looking for a higher low to higher high, but then price does this for a while. Price does this for a while, and it just doesn't want to go anywhere. And then at some point, the structure ends up breaking, and yes, it does end up going to new highs, right? So we have, wave cycles, we have Fibonacci cycles, we have all sorts of technical reasons, but you have to remember, the market from A to B, C to D, can get there almost an infinite amount of ways. And Will, you've been trading the market for a long time. I've been trading the market for a long time. There are lots of ways to get there. But what's important is you have a plan from A to B, C to D, and you know how you're going to get there. Now, if your preference is to only focus on trend trading, well, you're going to focus on trend trading this area and focus on trend trading this area. And what happens sometimes is traders get stuck trying to trade every area. So as an example, I'm just doing some teaching right now. If we have a low to high, higher low to higher high, traders will try to do this. Traders will try to buy, okay, they'll try to buy this, and then they'll try to sell this, and then they'll try to buy this, and then they'll try to sell this, right? And so, and in theory, that's great. If you are going to pick every top and every bottom, in theory, that's great. But the reality is, I think you can make a lot more money and be a lot more consistent by increasing your win percentage by going with the overall flow. If the market is showing promise to the upside, then I would focus on this, and I'm going to highlight this in green and make this thicker. I would focus on this area and this area and forget about the pullbacks. Right now, unless it's completely overextended, completely overbought, and we see tons of pockets and tons of pivots and all these great things to trade back to, focus on the predominant trend, right? The prevailing trend. Don't fight the flow. Stay with the path of least resistance, all that good stuff. So if you've ever been in that situation where you are trying to trade everything and you get yourself in trouble, I've been there before, right? We all of a sudden try to trade this, and the market does this instead. Right? We think it's going to go down. We think it's going to find that 382. We think it's going to find that 50, but instead it barely pulls back. Then it jumps up higher. Then it pulls back down. Then it goes higher. And so we might get a break-even trade. We just waste a bunch of time. And instead we could have just focused on waiting to buy this. So, that just comes with experience. But I'm just saying, if I could give a shortcut today, just if you have a directional bias and you're firm on that, and you think you've got open space, that's what I would recommend. Looking for, you're looking for breakouts and open spaces to trade trends, and then you're looking for support resistance and structure to trade ranges. And if you look hard enough, a lot of times on the higher time frames especially, you can see lots of structure, lots of support resistance and ranges to trade. Case in point, I'll go back to that pound CAD, which I'm on right now. Take a look at this chart. Okay, tell me right now if you see this. Now I know I have my trades in here because this is from my Flex trading room, but on the higher time frame, does this look like a trending currency pair? Yes or no? On the higher time frames. Now, granted, we can go down to smaller time frames and see that this is an amazing trend and this is an amazing trend, and even this recent month was a good trend to the downside. But overall, if you didn't know this is a daily chart, would you see that this structure here is pretty solid support? This structure here is pretty solid support. This structure here is resistance. This structure here is resistance. We see that, right? So if you go to the higher time frames, you start making a habit of planning on your weekly charts and daily charts. You'll keep that perspective in mind. You'll have much cleaner areas of where to buy low, where to sell high. That makes sense? Trudy says, how do you trade like that without an automatic strategy? Well, that's one thing that actually, let's kind of make this full circle. That's one thing that helps about having the news, right? Like, I knew going into this week, Trudy, that the news was going to be important on the CAD on Wednesday. My Flex room, we have class from 8 o'clock. We went from like 8 to 9:30. I was just telling traders, look, keep an eye on that CAD cross, because from my actual trades, I was going long pound CAD and I'm going long Euro CAD. And this is what I was looking to do in my plan. Okay, my plan was, if the pound CAD comes to this level, I'm going to buy it. If it comes down to this level, I'm going to buy it. Okay, so I already had this plan predetermined without even the news being a factor. But when the news created that jump, look at what it did. That level that I just noted here was exactly the same low, and it spiked right down towards it. It's crazy. Like, you think about this. This is like playing chess. This is like putting a puzzle together. And the more time you spend in the Forex market, the more you appreciate how technically obedient it is. And so even with that trade from Wednesday, looking at the 1 hour chart, what did this do? All this did is came right back down to test this low. That's all it did. And so from the 1 hour chart, it came down and perfectly tested it. On the 5-minute chart, you could see that price went from red back to green, and it ended up filling that inefficiency in pocket right there, which is fantastic, right? So it's just good. It's just good price action trading. That's all it is. Now, I'm not saying that you're gonna, see this one pocket and notice this isn't something I just pulled out of my magic hat. Like, this has been something I've traded for years. So it takes some repetition. It takes some experience to see that this can happen. But if it wasn't for my larger time frame structure, I would have never traded that, right? If it wasn't for the daily time frame showing signs of support, if it wasn't for knowing that support is probably the easier trade right now, there's no way I would have just guessed that, hey, that's the bottom, that's the falling knife, I'm going to buy that. It's coming down into a major support area that I'm interested in buying, and that plan was already premeditated. So here's another saying for you. Here's another truism for you to write down. If you don't see the trade coming, it's not a trade, right? If you don't have this trade part of your plan, it's not a trade, right? To make money consistently, it's not about luck. It's not about luck. This game will not reward you for being lucky. You can have generosity. You can have trades that run further than you expected and profit. I've had plenty of good trades where a trailing stop loss runs and makes me money, but it's part of my plan in the first place. So going back into what Will was asking earlier, how are we doing this week? This is just a document that we track in my trading room. We've taken a lot of trades so far this year. We've had a pretty good track record, and I just have to go down to the tallies here. So we're up 35,000 pips for the year. It's pretty good for a trading room. It's pretty good. And, we've canceled some trades. We've had some losses. We have a lot of winners, as we should. That's what I try to do, is win as much as possible. I'm the type of trader that likes to have a good win percentage. I'm the type of trader that trades really small and conservative, but I like to build certain positions and build areas. And right now I've got some great trades. I think pound CAD is a good trade going back up towards 7,200. I think that Euro CAD looks pretty good to go back towards 4,600, like we talked about a little bit ago, right? I like this trade going back up towards 46. One of my favorite trades right now, and this has been like a pretty steady trade for me the last couple of months, is I am looking for a bottom here on the euro dollar. Okay, now I'm saying I'm looking for a bottom because we might not defend this low exactly at 15.20. We might see the euro dollar do something like this. We might see it break where it's like high to low, lower high to lower low, lower high to lower low. Maybe we have some type of falling wedge, and then the euro dollar starts to go higher. You can look at the dollar index and try to figure this out. In fact, the dollar index this week was pretty difficult to trade because we had a lot of indecision. Take a look. I told traders this week in my flex room, we have indecision on the dollar index because we have 1, 2, 3, 4, 5, 6. Yesterday's candle was the first candle that broke out. But is this a breakout or a fake out? That's a question for you to answer. Is this a breakout or fake out? Type it in the chat. Breakout or fake out? What's price doing today? So we broke out yesterday, but we did what today? We pulled right back into that range. We pulled right back into that zone. And the dollar actually is getting stronger today. So if you take a look at your currency strength, you've got Swiss and dollar on top. You've got the euro a little bit softer. The New Zealand's the weakest of the day, but the dollar pulled right back into that range, which means this was a fake out. So now I am wondering for the remainder of next week, will this be still range bound? So we could look at this next week and say, okay, well, there's really not a lot of action here on the dollar unless we are going to go either back down to these levels and get back below this yellow box and continue to head lower, or this was the fake out that then reverses to the upside. And this might go green and close above the yellow and then be back up here towards highs and channel highs, right? So sometimes price does this stuff. And another thing, if I could give you some nuggets today, which I feel like I'm doing, the close of the candle is really important, right? The close of the candle. So yesterday's close was really important. And I'll zoom in. Let's go to the 4-hour chart, okay? This is what we'd like to see. If we have a breakout, which we do right here, so that 4-hour candle does confirm. Let me use an arrow. So the 4-hour candle confirms a breakout. Now, what I often like to see is I don't like to chase price, okay? If we have a breakout, I'm looking for a break, retest, and go, right? And that retest would be back here with past support. So we did test support, but when we had 1, 2, 3 candles, and then the 4th candle closed higher, this is no longer the trade I'm looking for. So we close below, which means, okay, I'm going to look for a sell trade. But then we don't confirm any additional bearishness, right? Now we're back into the range. I have to cancel that thought of like, I need to go short on the dollar index because it's no longer valid. Now we're back inside the range and this can just do sideways price action like it has the last 7 days. So it played a trick on us, right? It's not a big deal. And even if worst case scenario is this, let's say that you saw this confirmation. Let's say you waited patiently for that to break out. And you're like, okay, here's a sell trade. This is the worst case scenario, right? You take a sell trade right there. All right, you take a sell trade, and then when this closes back inside the range, you get out of the trade. You know, I mean, that's it. Like, acknowledge that your analysis is not what you thought. It didn't want to confirm. It didn't want to continue. So you get out of the trade. You know, and one thing I know Will does a great job. I know if you're taking trades with Will ever, and you're focused on, you know, clean trading, you're going to have an area that you want to buy or sell. You're going to have an area that you know that you're wrong, which would be your stop area. And then you have an area that you're right. So look, real traders, real successful traders take stops. They will close out for losses. They have to close out for losses because you can't have a trade run, 1,000 pips against you. Now, I trade really small, and I've let prices run against me, hundreds of pips. But if I can clearly look at a chart, and this is like the test. If your dog, if your wife, if your kid can come into your chart and say, that direction looks like it's going down. That direction looks like it's going up. Case in point would be this, okay? If somebody can tell you on this chart what direction to trade, and you're holding the opposite direction, you're probably stubbornly in that trade. Okay, and I bring this one up because I am personally in this trade and I'm personally short. I'll show you this right here on my live account. So on my live account, I am short on the Swiss yen. I'm upside down $288. Again, it's not that bad. I'm upside down on a $50,000 account. It's not the end of the world. But I kind of built a story around this trade, and I'm deciding to stick to my story. Now, that doesn't mean that I'm right. That doesn't mean that I'm going to be right. I might have to manage this trade. I might have to get myself out of trouble on this trade. But I'm going to give this price some time to work, and I'm going to see if I'm actually right. If there's a way that this is going to hit resistance, if we have a stronger yen or a weaker Swiss, one of the two, I'm looking for this thing to actually put in a bit more of a top and see if we can come back down and find some balance. We also have pockets and pivots, things that I like to trade. We have a higher time frame, kind of an annual high that I'm looking for. So again, believe me, if you give me 5 minutes, I can convince you that the Swiss yen's going down. It doesn't mean that I'm right. What it means is that I need to be okay with managing the trade. And the same thing goes for you. If your trading plan is, if you sold it right here and it goes against your trade, are you going to get out of the trade? Because some traders do a good job of getting out, and other traders will sit in a bad trade forever. Okay, and all I'm saying is, if you're willing to let price go against you, you better trade small and you better trade conservatively so your losses are not big. Okay, the best thing I can suggest for any trader out there is equity management and control of your trade size is the biggest differentiator between successful traders and unsuccessful traders. You know, how well you manage your capital, how well you manage your risk, that is what this game is all about. You know, and it's crazy. Like, that seems so simple. Like, well, I can just trade small and conservatively. Yeah, you can, but most people don't. Most people get Forex and they open an account and they use leverage like 200 to 1, 400 to 1. And it's incredible. Like, trading permissions with leverage is incredible, but it's also, if you trade it, you know, I was say recklessly. That's the word. If you trade it recklessly, it is just as hurtful as it is helpful. Okay, so we always have to have a trading plan. Like I said earlier, if you don't see it coming, it's not a trade. So this Swiss yen, here's what I'm doing. If this starts to work a little bit higher, I'm going to wait for some better signs to close with some indecision. I'm going to look at some aggressive trend lines, and I'll start waiting for confirmation over here before I start adding anything else. I'm in a base position right now. My break even's around 122.60. So 122.60 is right here, right? It's not that far off from current price. I know it's upside down a little bit, but it's not that far off. My target on this trade is to get down to 118. So I'm still looking at a very nice profit level. And even right now, even if price didn't go too much higher, my reward to risk is still in my favor. But when this starts to go my way, I better be able to hang on to this trade down to my profit level to make this worth sitting in this trade upside down. Make sense? So I know I'm talking, 100 miles an hour and I'm going through all sorts of stuff, but the point is there's a lot of facets, but if it comes down to a couple of things, let me just write those truisms. Equity management is the most important component of trading. And that's coming from somebody that's been trading for 13 years. I've been trading full-time Forex 13 years. I've been stocks and options for the last 20 years. Equity management on whatever asset. I don't care if you're trading cryptocurrencies, trading futures, trading Forex, trading stocks and options. Equity management is the most important thing. Now, what you do with that is up to you. Okay, what I do with this is how I deal with it. This is just my preference. I trade conservatively and test areas, right? I buy, I buy low, I sell high, conservatively. Conservatively. Got to learn how to type. And test areas. So I buy low, I sell high, and what I've really done the last probably 5 years that helped my winners get that much bigger is I add to winning trades, right? And I try to trade quality over quantity. So I want to take high quality trades. I want to really find a great setup. I'm willing to wait days and days and days, weeks and weeks and weeks sometimes to take trades. If you take a look at this flex room, for example, look at a trade like this. Okay, we closed out for 3,000 pips on the dollar Swiss earlier this year. Now, this wasn't a trade that we started on the first of the year and all of a sudden got paid. This trade took about 3 months. But I'll ask you a question. If you had a trade that takes 3 months, that's about 60 trading days. 3,227 pips divided by 60 trading days. That's like making 53 pips a day. Now, how many of you would sign up and be happy saying, hey, I would love to make 50 pips a day? I don't know how I'm going to make it. I don't know what I'm going to trade. I don't know if I have to day trade to do that, or over the course of time, could I make 50 pips a day? And if I could say the answer is yes, on a trade like this, you're averaging 50 pips a day every single day for 3 months. That's what it works out to be. Now, do I always sit in trades for 3 months? No, of course not. But it was one of those trades that we built positions, as you can see, and we also added to our winning positions. Okay? So there's a lot of ways to do it. I build positions. I take good clean setups where we buy and we have a take profit and a stop loss. We have some losses in here. I'm not going to say I'm flawless. I'm not. We've taken losses here when the trade goes against us and it breaks our plan. That's fine. Let's see here. Lots of wins. I'm trying to a lot of the wins are, 100 to 200 pips, a couple hundred pips here and there. Biggest loss, we try to keep the losses relatively small, but you can see here much bigger wins and losses, right? Much more frequent wins and losses. We do cancel trades where they don't go our way. We put some entries in that don't get filled. I mean, that's trading. There's never a perfect way to play it. There's never a flawless way to trade. You're never going to win all the time. But if you adapt with your trade size, if you trade conservatively, focus on good quality trades, it's a lot easier to get profitable, right? And this one here, survive. That's how we survive, right? How many of you? So give me some comments here. How many of you have been trading for over like 6 months? Over 6 months, and then over 2 years, and then anybody over 5 years? I'm just curious. Because even a trader that's just getting started, I mean, if I can give you some good habits to start with, and you never have to take a busted up account, you never have to blow up an account, you never have to have a margin call, you're better than most. Like, most people use Forex and they use leverage really, really irresponsibly, and they end up having some really nasty losses and horrible stories. Okay, so Diva says nearly 6 months. Okay. Let's see. Ashley says, it seems like you take a lot of positions on a lot of pairs. What account size? Yes. So that's a good point. But, again, keep it in perspective, because if I have a lot of positions, I'll show you this right now. I'll show you right now. I don't have a lot of pairs that I'm trading. Check this out. Okay. So right now I do have a lot of positions running, but I have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. I have 13 currency pairs that I'm focused on. So basically it's this. I'm trading 13 pairs that I have a pretty good feeling, I have good technicals, not feeling. Feelings don't do you anything in Forex. I have good analysis that suggests that I have a direction to trade. And so of these 13 currency pairs, I'm building a position, and basically I'm testing some of the levels. I want to test the support and see if it holds. And then if it holds, I want to add to my winners and see if it makes me more money, right? So, yep, that's what I was going to say. So Lucas says over 6 months, but nothing to show. That's not the point. I wasn't, I don't care if you've been trading for, look, I've met traders that have been trading for 5 years with nothing to show. All I'm saying is, if you're still here after 2 years, if you're still here after 5 years and you're still trying to trade, here's what we need to avoid. Let's avoid the big losses, right? Let's avoid the blow up accounts. Let's avoid, like, okay, I started with $5,000. I'm down to like $2,500. Am I ever going to get it back? Look, learn how to trade. I'm telling you, like, once we start to get quality trades, you start to get some directional biases. Once you start to trade with somebody like Will, somebody like me, I'm telling you, a trading room is probably the most helpful thing that I've ever offered to traders. I can build systems and classes and strategies and robots, but I'm telling you, a trading room, trading live with somebody, getting guidance and directional bias from somebody that actually is a good trader, that's going to help you a lot more. And the reason why is I can say, look, I'm confident we've got this space to this space to be profitable. And you know how many different strategies you can deploy? As long as we are right in this area to buy and we're right in this area to take profit, you know how many ways you can trade that to make money? I mean, you could trade 100 different strategies to make money, right? You can place one buy trade and one take profit trade and make money. You could trade a little system that scalps it in a bullish direction the entire time and make money. There's all sorts of ways to trade this. But if you're going to go from this level to this level and you're going to try to sell it, that's probably going to be more difficult. So a directional bias helps. Having some good analysis helps, right? So, maybe in addition to having a great broker with good trading permissions and good leverage, It's also adding some type of service. Maybe it's adding a trading room where you can trade live with a group of traders. Maybe it's trade live with me. Maybe it's doesn't matter. All I'm saying is that's going to help. So and I know this because we have, thousands of traders at Market Traders that have, 5 systems, 10 systems, 20 systems. But if it's a trend-based system, most trend systems in their own way accomplish the same thing. They buy in a buy zone, they sell in a sell zone. Most range systems have the same thing. They sell high, they buy low, right? I mean, that's trading. The market's going to go up, down, or sideways. So if you can survive and you can keep, and this is, even if, like Lucas said, nothing to show for it, even if this is your equity curve, if you have nothing to show for it, as long as you are not taking massive losses, Lucas and everybody else, you are so close to having this start to happen. You really are. I mean, if you realize, like, I make some money and then I give it back. I make some money, I give it back. A lot of times the modification of that type of experience is what is making you money? What is making you money? Because here's what a lot of times I see. Traders make money and then they trade the exact same strategy, the exact same way in a very different market environment and they give it back. Case in point would be this. If the market goes from a trend where traders make a lot of money and then the market goes sideways and they still try to trend trade, guess what happens to their account? They make money here and then they give money back here, right? They give money back because it's not going higher. It's not breaking out. I'm not getting the confirmation to go higher. Make sense? So if we recognize that the conditions are changing, recognize market conditions, right? Up, down, sideways, trend, or range. Plan on the higher time frames, daily and weekly charts. You can see that a lot cleaner on the higher time frames because you eliminate all of the unnecessary, the market's gibberish. You know, all the little nuances in intraday trading. A lot of it's noise. Big levels, big institutional levels. You can see whether the market's trending or ranging, right? So if you can survive, you're fine. Then once you learn how to survive where you're trading, conservatively, you're taking control of your equity management. I mean, you build, right? You take quality trades. You don't force trades. You don't have to force trades every day. Wait for price to come to you. Quality over quantity. Don't force trades. And I will say this. If you can survive, take high quality trades, you're going to start recognizing different market conditions and you're going to start recognizing what you're better at. If you start having more success trading trends, then guess what you need to focus on? You need to wait for a trend to show up. You need to wait for a breakout to occur and confirm and then start focusing on that trend and trade it. If that's how you make your money, make as much money as you can being a trend trader. Okay? If you make more money being a range trader, then you need to trade currency pairs that don't like to trend. There are lots of them. In fact, most of the currency pairs don't like to trend. Right now, we've had for the last 7 years in Forex, we've had low volatility trading. Since 2014, the market has been pretty low volatility. We've had pockets, believe me, like dollar went crazy 2014, 15, Brexit 2016. We've had some crazy pockets here and there of high volatility, but for the most part, it remains a very efficient, technically obedient market. But if you make more money trading support and resistance, that needs to be your go-to. Trade support resistance, sell high, buy low, have a stop loss, trade what you're good at. And as you're trading what you're good at and you're building your account, right? And all of a sudden your equity curve is starting to go the right way, then you start to focus on what you're not so good at and improve it. Because you can go from making some money this way to then actually adding a little dynamic to your trade, which is, you know what? I can trade the trends really well, but I want to learn how to trade ranges better. Where I can trade the ranges really well, let me learn how to trade trends a little bit better. This to me is how I became, kind of the well-rounded trader that I am. I can now trade, trends and ranges pretty well, but a lot of this I built automation for. My go-to was probably, when the trend gets extreme, I tend to buy low and I tend to sell high. That's been my go-to for many, many years. But what I've been missing out on is as I wait for the extreme to set up, I have now found a way to actually participate in the bulk of the trend and then get the lows and highs at really solid levels and really great conditions and really massive extremes. And then I work my way back, right? But I can at least take some money in here with the trend, wait patiently for my alignments to give me the extremes I want to trade down here, And so now instead of waiting and taking a buy trade there, I actually have some money to be made and have some money to be made. And so I'm just kind of filling in the holes. I'm filling in the gaps. I'm not looking to trade all the time. I know this is a 24-hour market, but I'm looking to trade when price is at a level I want to trade it. If it's at a level I want to buy it, I'm going to buy it. If it's at a level I want to sell it, I'm going to sell it. I also set tons of chart alarms at resistance, chart alarms at support. It's important. I mean, you could ask me where the market is. That most of the time, I mean, within as long as I get the right decimals here, like the yen pairs have 3 digits. But for the most part, I could tell you each week like where things are at, what levels we're looking for, and it's just we're in this market every single day. So know your levels, and those chart alarms help. I can be away from my computer. These chart alarms go right to my phone. I know whether it's time to buy or sell. I know whether I'm in profit or not. I know what my break-even levels are at. I mean, all this stuff comes with this is what you need to be responsible for. Take accountability of your trading, know where your trades are at, and that's it. So I see that Will's doing a great job answering some questions for me. Did I miss anything? Lucas, so like I said, don't feel discouraged. Anybody that's been over 2 years, over 5 years, you're just getting started. I mean, most traders that are still in the game, like I said, I've been trading since 2008 and now 13 years into this. It was probably a 1 to 2 year learning curve for me. And I was fortunate. I actually learned from a professional trader. I learned from a professional fund manager. I got to sit on Standard Chartered, HSBC, Barclays trading floors. I got to see major LIBOR rates and watch how institutions do it. Watch the major transaction levels. I mean, my eyes were open to a lot of things early on. But the way that I started to trade was I was a euro dollar 3 hour a day trader. That was 13 years ago. That's how I started. I traded 1 minute charts on the euro dollar every single day. And I mean, here I am telling you, trade on the weekly, trade on the daily. And, I have evolved to looking at higher time frames, looking at bigger picture stuff. And now, especially when I teach traders, it is way easier for me to say this. If we can buy here and have this open space for profit, if I can make money here, I know you can too. And that's one thing that I will like. I can't promise, right? I don't want to promise, but I will say this. There is no reason for any of you out there watching this, listening to this, if I am showing you that I can make money and Will can make money, and we're taking the exact same trades that we talk about in these live sessions, or we post a video, or we post it on whatever, you can make money too. In fact, it actually drives me crazy when we've had this trade from a low trade, this trade to a buy trade, and we've been long, and I've got somebody that says, Chris, I'm short. I'm like, okay, I don't know why, because we've been talking about this being bullish for the last 3 months, right? So all I'm saying is that's where the quality over quantity helps. That's where maybe the guidance helps, and easily. If you have good equity management, look, you could be short right here, and you could short it again. You could short it again, wait for confirmation, and you'll probably be fine. But it's all about trade size and equity management. Okay? But if I can do this, if I can show profits every single week, so can you. I know that. And it's easier for me to find these big open spaces where it's like, we're at support, here's resistance 200 pips away. Let's buy here, let's build, and let's make some money. And that's what traders do. And that's why, my traders in the flex room have been successful. That's why, a lot of them for the last, 3 years, I've had the flex room running live for 3 years. We've been really successful. Consistent gains, 25, 30,000 plus pips. I think last year we're at 40,000 pips. So that's the game. We try to find great trades. We build great positions. We make a lot of pips, right? Pips will pay. So any questions for me? Will, anything else? You can chime in here. We can have another conversation. I just have class here in the next 10 minutes, but
oh yeah, no problem.
I'm ready for anything.
Okay. Yeah, no problem. I think, a lot of what you showed in here is a lot of what we've been talking about. We've been very much trading a lot of CAD positions here.
CAD's great.
And, I had shown pretty wide stop losses because I was looking at the long-term move, and I was actually long. We were up, and then that CAD announcement came out, and then suddenly it was, oh gosh, I'm 500 pips in the red now on these 10 trades. But I ended up closing out some winners from last week's session on these CAD trades you're talking about. The pound CAD, I think we did 26 pips on that one. On the Euro CAD, I think we did a total of 130 or so. Looks like.
Excellent.
Maybe 150. Yeah. And Aussie CAD, we did another 70. I did take a loss on the dollar yen. We lost 43 pips there. But
Okay.
I mean, end of the day, I was okay with a 43 pip loss.
Sure.
So, it's just kind of one of those things that, the one thing that put me over the top, and I got this from you actually, was really the stupid things. Well, in perspective, I guess, but just trading smaller because I can deal with a lot more movement from the market and I can build a position. For example, we've been short on the pound USD. If you go pull up the pound USD, Chris.
Sure. Yeah.
We've been short on this thing for weeks, and I'm still in it. I'm still within my trade plan. It's not costing me a lot of money. I'm down $35. Like I don't care about $35. So I'll add more positions to it if I need to. I generally I've kind of a similar feeling what you showed on the US dollar. If we could, I know that a lot of these CAD predictions, all the dollar moves, all that stuff, kind of boils down to oil. If you pull up oil,
yeah, let's pull it up for sure. Yep, oil. This is the first week. In fact, this is the first week that we're gonna form a red candle here by the weekly in 9 weeks. This is crazy, right? 1, 2, 3, 4, 5, 6, 7, 8, 9 bullish candles in a row. This is our first kind of indecision candle, 82.27. We're still not breaking confirmation. We're still not breaking the trend line, but we're pretty darn close, man. So anyway, well, I mean, this has a lot to do. I told traders this morning on my YouTube channel, if we confirm below 80.50, here's what I'm looking for. I love if we're going to see oil drop at least down to this past resistance right there. The CAD is probably the best way to profit from that. I mean, you can trade futures, you can short oil, but I think the CAD is going to be the biggest mover from this, and it might be much deeper. We might break here, come back up and retest, and then form a top and then go lower. I mean, this is what I like, Will. There's all sorts of ways to trade this, but with good equity management, I think that confirmation on the right-hand side of the trend line gives sellers an advantage here and sellers confirmation. And I am looking forward to oil actually dropping. But I want to see some more price action on the right-hand side of the trend line, because if this thing closes, today indecisive, and then next week on Monday is a big bullish candle, we're not done yet. And it's going to be, watching this 80-50 level really closely. So what are your thoughts this week on, what have you been telling the traders this week on oil?
I mean, as far as oil, we, well, for the most part, what we've been talking about is a potentially overbought situation, kind of waiting for the same type of confirmation that you're talking about. We have kind of capitalized on these CAD positions. I did have pretty wide, kind of trend expectant, take profit levels, but I typically take profit regularly. So, and that's really kind of what we do in here. I trade live in front of them in here every week.
Nice.
Nice. But yeah, generally, like, if oil gets below that $80 level, I've been looking for levels as low as like 67 down there, 65. Even.
I totally agree. And that's, I'm saying from the conservative side, like even there, we're going to see some movement on the CAD. We'll see a lot of movement on the CAD. If oil drops, I mean, that's like a 13 to 15% move right there. So CAD will definitely reflect that. So, Aussie CAD, Euro CAD, pound CAD. Let me use better lines actually.
They can actually, Chris, they can actually everybody in this room has a CFD account, so they can actually trade crude.
Oh my, that's even better. Yeah. I forgot this is non-US. You guys have all the good permission. You have better leverage. You have better simple options. I'm sitting here like 28 pairs. That's all I can do in Forex. I do pretty well with that, but I'd love to trade CFDs and actual commodities. That'd be freaking great. So speaking of commodities, Will. So look, oil I think looks great, and the levels you pointed out are awesome. I think that's a minimum spot, and like you said, I could see this going down to mid 60s. I could see this going down to mid 50s. I really think that oil is going to find some supply and demand levels that may be range bound, because we had, the COVID crash, the recovery. We've had crazy amounts of trending on oil. I could see it going into some range characteristics here the next maybe 3 to 6 months, which means I'm looking for some bearishness in the near term. But one of my favorite trades right now is actually silver.
Nice.
I like silver a lot. I think that silver bullish looks pretty darn good. In fact, Will, we had a meeting this week where didn't you say silver like 10 times?
Yes, I did.
That's
silver.
what I thought. Yeah. So yeah, I like silver a lot. I'm actually trading SLV for me. Like I can't trade XIG in my MetaTrader 4 or my broker platform for Forex. So instead, I'm trading, I'm paper trading it with SLV. But my direction, I mean, structure's so clean. really great support. We're on the right-hand side of the trend line. Any type of dips or pullbacks, I'm buying. I'm looking to get back even just to range highs. Get this back to $29, $30. That's about a 25 to 30% move. There's lots of pips to be made in here for those of you that are trading this via MetaTrader 4 like Forex. But even, my stock holdings of SLV, I'll certainly take. I've got I'm trying to think, probably a $20,000 position on it. So if I turn this into, $4,000 or $5,000 of profit over the next couple of months, I'd be pretty stoked with that. And if it comes back down into the same lows, this is area 1 that I'm buying, and this is area 2 that I'm buying. Again, on the right-hand side of the trend line, I still like bullish, 29 to 30. Inflation, if it's a real thing, it starts to run a little bit higher again, start to spook the markets. Inflation is going to be a real thing, and silver tends to really perform well. So it's one of my favorite commodity plays going on right now. So what else? You also, are you as actively long on gold, Will? You like gold as well, or mostly silver? Let me see if I lost you. Did I lose you, Will? So silver is.
Yeah, no, sorry,
actually,
my headset.
Sorry,
My headset died there. But yeah,
Okay.
no, it looks like the market doesn't like it as much. At least not today. But yeah, I'm also bullish on gold. I think gold has room all the way up to, really, I think we can break new highs. As we get into next year.
I think so too. That flash crash move is really interesting right there. So, I actually, traders and I were talking about buying GLD in here or buying gold, getting back up to 1830. If we break above that neckline, next destination would be up here. Just look left. We've got score point there, go after new highs. Gold could definitely be on a nice little rally to the upside. That being said, we're not taking out highs yet. We might have some consolidation between this big flash move. Maybe this is a bit of an accumulation zone. But once we get free and clear of 1830 or higher, this thing's probably going to 2000. And this could be also a big range of support down here and resistance up here. But there is plenty of opportunity on gold to go up. There's plenty of opportunity on silver to go up. And it's interesting how that plays out we'll go back and kind of come full circle with this, with the dollar. Okay. The dollar index to me is almost like it's a very clear channel. We have this low to high had a pullback. We had another push up here towards higher highs. De-extension is getting hit, coming back to this fourth wave area. I just see the dollar kind of dancing around here for a little bit longer. Now, whether we come all the way back down, hit support, and then go back up, or we actually break the structure, come down to this level, and then go back up, I'm not sure yet. We're talking about multi-year levels, multi-year lows on the dollar index. But one thing that's always exciting is just trying to keep track of everything, right? The dollar does this, and oil does this, and gold and silver do this. Usually there's correlations, but we've seen some broken correlations a little bit this year between, growth stocks and value stocks. We've seen broken correlations between commodities and the dollar. Risk on, risk off trading has been pretty tight. That's been one of the strongest correlations I've seen in the last couple of years. If it's risk off trading, it's stronger yen, stronger Swiss, stronger dollar. If it's risk on trading, it's stronger Aussie, stronger New Zealand, and stronger CAD. So it's really been a big play of, what is the dollar doing? What are commodities doing? And that offers a lot of opportunity for traders.
All those things that Chris just said, you guys are going to want to rewind this video later and write all that down. All very important information. Chris, I want to make sure people know how they can trade with you and follow along with you. If you can, give people, you can pull up the Pulver report thing on here too, if you want.
Yeah, I was going to say, so a couple ways. If you just want to join me for fun on Mondays and Fridays, I go live on my YouTube channel, youtube.com/Chris Pulver. You can check that out. We're going to be live next week, Monday and Friday at 8 a.m. And then also my newsletter, which is pulverreport.com. Or like Will said, you can actually get the Pulver report or my newsletter directly from the 123Trade website. So that's not it right there. You have to go to the actual website and not have that attached to it. So pulverreport.com. It's a free newsletter. I'm also sending weekly picks, my top picks, whether it's a Forex pair, whether it's stock, option, or crypto, because I trade everything. But, again, I'll keep in mind that with the live YouTube sessions and my Flex trading room, we're focused on Forex trading. So just as a quick example before I go, when we trade in my Flex room, here's my routine. We start out with the futures market. We just look and see, is it bullish or bearish? Are we looking high or looking lower? What's risk appetite for the day? We go to the major indices like the SPY, the Qs, the Dow Jones, and then we jump into cryptos, and then we do Forex. It's mostly trading. I mean, look at my results. Look at my trade log. We're not tracking anything else other than Forex. So for those of you that are here to trade Forex, the Flex Trading Room is a way to join me. And I know with the Pulver report and the newsletter, we have a great deal, like $27 to get in for the first month. And give me a month. Give me a month, trade with me for a month and see how it goes. I think it's going to be great. We've been consistently profitable month after month. I can show you that here with my track record. So these are pips for the month. It's been active. Let me go to pips here, actually. So pips, there you go. So, this month we're up 1,059 pips. Last month, 2,500, 2,100, 3,000, almost 3,000, 1,000, 1,000, 5,000. I mean, we make pips. We do pretty well. So there's all sorts of ways to do it, right? But I would say this: don't stop learning. Don't stop evolving. You're never better than the market. You're never going to figure it all out. It's always constant improvements, constant modifications. You could have the greatest year ever, or you could have the worst year ever. After December 31st, nothing matters. Just keep trading, right? Keep surviving, keep trading. Every year's a challenge. Every year has nuances. But one thing that's really cool is the market's only going to go up, down, or sideways. You just have to figure out how to be better at it. If you're struggling, let's get better at it. If you're doing well, keep doing well. Like, keep doing what you're doing well. Keep exploiting what makes you money, and then just refine those weaknesses, refine those struggles, and just keep improving that bottom line. So it's an endless journey. It's continuation. It's evolving, but man, it's a lot of fun. I would. There's a lot of worse things you'd be doing out there, Will, other than sitting at home, trading on your computer, on your phone, and following along with some, one of the greatest financial markets in the world.
I am blessed to have sat here and watched this trading session with the banana trees outside my window. I feel pretty good about it. So
love it.
I love doing these sessions with everybody. I hope everybody learned something here today. I know that I did, and it always keeps me sharper to follow along with other sharp traders. I know Chris, I probably pump you up maybe too much sometimes, but I love following along with you because I really appreciate the whole approach. I mean, because really what we like to show in here is not so much that the announcements and all that stuff drives the market. It's more or less an indication of when the market might be making a move. It's kind of an excuse.
Right.
And
right.
It's
exactly.
Because there was years that I spent, and I was looking at non-farm payroll release, and I was waiting until 8:30 on the minute, and as soon as that number came out, I was going to try to buy into the volatility and pay way too much money for spread and probably get smoked. So
yep.
I mean, those days are over. Yeah, those days are way over for me. I'm much lazier, and I don't like to stress about this anymore.
Right.
And the reality is that everybody in here probably wants the same thing. It's really kind of one of those things where I want the market to work for me. We want the market to work for you too. That's what this is all about. I've swung a shovel before and it sucks. This is a much easier job. But Chris, I know you do need to go. I appreciate you coming out. You have anything else you want to close out with before we get out of here?
No, that's it. I mean, look, at the very least, keep following Will with 123Trade. You're in great hands. If I see you in the Flex Room, make sure to say hi. If I see you next week in YouTube or join the newsletter, all good stuff. I mean, there's plenty of content out there that we're trying to help traders. We're helping thousands of traders, and whatever asset class you want to trade. I mean, I will say this: if you want to learn how to be a trader, Forex is the way to be. A trader's market like Forex, you can be a great stock trader after learning how to trade Forex. You'll be, in fact, stocks are like easy. Trading options even easy. Like Forex is the purest technical market. It will teach you how to be a much better trader. So I'm really happy and lucky and fortunate that I learned how to trade Forex, and the price action experience and the structure and the patterns, all that stuff. It's so obedient. It's amazing. It's almost like if you care about the puzzle, if you care about playing chess, if you care about forecasting and predicting. And I'll say this: if I didn't feel like I could do this, if I didn't feel like I could actually anticipate and forecast what the market's doing, I wouldn't be sitting here doing this, because all these results right here are from planned trades, right? This isn't just throwing darts at a dartboard. This isn't just, having my dog pick some random currency pair to trade. Like, these are all premeditated positions. So it can be done. It's not that difficult. So hopefully today's session helped. If you have any questions, reach out to Will, reach out to me. But we're just here to help. Thanks, everybody.
Yeah, absolutely. Thanks again, Chris. Anybody has questions about how to trade with Chris, how to find any of his access, any of that type of stuff, then by all means, send us an email to brokers@123trade.com, and we can help you find that stuff. But otherwise, it is the weekend, folks. Hard to mess up a Friday. You guys have a great weekend, and be good or be good at it. Take care, folks.